the tokenization is a process of issuing a digital representation of an asset on a blockchain. And of course, we can't move a physical asset online somewhere, but what we can essentially do is to move ownership of this asset. And tokenization is a process when we use a blockchain technologies to do so. And it's done by issuing digital tokens or digital shares, which is then representing the ownership. And this, however, is unlocking the hidden accessibility and enhancing the functionality of a real estate, which in our case is providing us with a new ownership structure where people can buy an asset such as real estate from 100 euros. It does provide private ownership. However, it's on the public ledger, meaning that you are your private identity, but however, you can always access and follow or see your ownership on a transparent public website or a blockchain scanners. It's not hidden somewhere under the doors or somewhere else, locked ownership structure. And it also allows us to use a passive income via impact investing, meaning that we all invest with a goal of course of generating some income, but however, it doesn't really matter how much cash you are generating if it's not creating any value. And by impact investing, you are increasing value and also meanwhile generating little income. And it's a beautiful combination of technology and real estate, which allows not just to own a little fraction of real estate, but however also follow your ownership and also trade it.
What attracted you to invest in Coreestate when there is a lot of different options to invest in similar projects? Why Coreestate specifically?
Well, that's a very good question. So I guess a lot of it has to do with the fact that I'm primarily operating within Scandinavia, northern part of Europe. And a part of my investment portfolio is within real estate. And based on my law and blockchain, I've been introduced to local companies within Scandinavia that are working within that area. And Coreestate was one of the first ones that I got introduced to. And the reason why I chose to be a part of this particular project was because that I saw that the potential of investing in a Danish-based company that's operating within this space, enabling investors to achieve a tokenized version of an asset. If it was to work anywhere in Scandinavia, Denmark is probably one of the toughest places because of some of the regulations around real estate and taxes and so on. So I thought if Coreestate is able to make a proof of concept or a proof of a good example based off the Graph 55 project, this could probably scale towards other parts of the Scandinavian market as well. So the reason why I say yes, I would love to participate in this was it's within the area of domain that I know, and I understand some of the challenges within the real estate market here because I do have some investments in real estate, and then B, because of the fact that this could make a good example to base other future investments off on in terms of tokenization within Scandinavia and also throughout Europe potentially.
Is there a difference in your opinion between investing in the fractional real estate and buying a real estate on your own?
Well, there is. Buying a real estate, for example, through an investment company, which many investors do, professional investors do, is at least in Denmark, like in many other markets in Europe, a very bureaucratic process. You have to, first of all, not only just make an offer for the asset itself, but also go through a series of documentation efforts both with the buyer and the seller, between the buyer and the seller, but also with the government registering the assets, ownerships, and so on. Decentralization or tokenization or fractional ownership of real estate assets is, in your case, the way that Coreestate is doing this is simplified. I would not say simpler, but it's more simple in terms of acquiring a part of the asset, at least.
Yeah, I think
Alright.
is one of the main reasons why everyone actually who understands the tokenization or the principles, would like, us essentially is the same, like, you're going and buying a real estate, but it's somebody else is taking care of this all legal struggles, and also the entry barrier is not that, the ticket size or whatever investment amount, it is a simply way smaller in this case.
If you compare it, for example, to angel investment, few angel investors have enough capital to invest 10 to 100k euros in every single company. A majority of angel investors maybe put in 10 to 50 to 100k in maybe 10 to 20 companies at any given time. And that introduces a lot of risk. And the ways that angel investors, for example, reduce that risk when they're investing in companies is by participating as LPs or limited partners in venture funds or funds. You could look at this as a similar example. Instead of you having to look for the actual property or the actual asset, invest in it, renovating it, and then renting it out and so forth, you can do that in a group. For example, through a company which has tokenized assets and done the work for you in terms of qualifying the asset, actually making sure that the investment of the asset is conducted according to legal requirements and so forth. So it's a way of de-risking investment in real estate as well.
Would you recommend to try out digitalized real estate rather than going for, the existing business model? Or
so first of all, investing in real estate typically for a normal person requires a bit of a capital. You can compare it to buying your first house. It's a similar feeling. If you're going to buy a real estate asset to invest in, you have to have a similar, if not more, capital available to buy that asset than you used to have in your personal asset before that. So first of all, it requires a large chunk of capital to start investing in real estate in general. So there is a lot of people, a number of people these days in Europe that do have money put aside for a rainy day, that are interested in investing it. And based on the microeconomics and the general economic environment that we have right now with inflation as it is, the options for investing are, I'd say, limited. This kind of investment does open up the possibility for those that maybe do not have enough capital to do it on their own, but have the capital to maybe participate in a fractional investment of a real estate asset. So I would definitely encourage people that are thinking about that to at least evaluate this as an option, because if you look at it from the angle of risk management, this is as risky, if not less risky, than participating in buying individual stock options or stocks as the same in that sense. So, however, this is backed up by a physical asset, whereas a stock is backed up by a business that's running something. So in that sense, you could consider this to be a more safer way of investing your funds. So I would definitely recommend people that are at least thinking about this to evaluate that as an option.
because, like you mentioned, right, to actually enter real estate investment is largely large tickets or experienced ones, and this is opening doors to brand new audience or who never had option before to buy any. We can't really split real estate in 2,750,000 pieces and sell to them, but we have some special legal framework to do so. Maybe you can little bit elaborate on that. What is the framework, or what are actually people buying?
Sure. So I always like to start with the fact that Denmark digitized real estate asset ownership some years ago, creating a system where you need to announce your ownership in a digital system, which is in effect maybe a first blockchain. We can only we can basically in that scheme we can handle split ownership. You know, I co-own a summer house with my wife, and we are both registered of an ideal part 50-50 of that summer house. So that is basically a digital asset ownership registration for real estate. It's not a blockchain because it's not put into a blockchain technology, but it is to a certain extent the same idea behind it. We are not able to, or Denmark has not yet put real estate on the blockchain. It's only on this Tinglys thing. So what we are doing is that we are taking the real estate asset, so the property, and we're putting it into a company, a sole purpose company, which only owns the property, and then we are fractionalizing the shareholder ownership of that, digitizing it so that we put the shares of that company onto a blockchain, allowing people to trade not the real estate itself or as parts of the real estate, but as shares in a company that owns the real estate. That's the sort of the thing we need to do at the moment first to create the vehicle where we can basically put it on a blockchain. So that is what we've been doing in this project. I think that answers the first question basically. You know, and I'm seeing, you know, I'm seeing that done all over Europe, all over the world basically. When you're talking about digitizing real estate, it's basically digitizing shares of SPVs that own real estate. I haven't seen any country so far, I think, that where you've basically taken real estate ownership in the central land register and put that on the blockchain. You could basically split ownership of a Danish piece of real estate into 1,000 pieces, where everyone then owns 1,000 of the real estate. You could register 1,000 owners, but it would still require the bureaucratic hassle of drafting documents, submitting them, getting them approved, and making sure that you oversee the proper registration and stuff like that. So it wouldn't eliminate the bureaucracy, but you could in effect create a real estate in Denmark that had 1,000 owners. Is my investment safe? I've been involved with you guys from the outset. My thinking has always been that we need to do it by the letter of the law. That's why you guys involve persons like me. So first of all, in Denmark, that may change, but in Denmark at the moment, a company in the APS entity format is not allowed to sell its shares in the public. So it was necessary to move into the AS entity type, which has a capital requirement that is 10 times as high as the APS entity. And then we in Denmark have an exception from the European rules on prospectus requirements that allows a company to raise up to 8 million euros a year without having to issue a prospectus that needs to be approved by the Financial Supervisory Authority. And you qualify for that based on the amount of money you're raising for Graph 55. And then, but in any event, we took basically a prospectus format, and then we have crafted an investment information memorandum about the Graph 55 that basically has the format of a prospectus. So that details specifically on the risk side of things, all the risks associated with investing in this kind of business, from the value of real property in Vejle, to whether you guys are able to, do what you need to do about the refurbishment once the property has been sold. It addresses that you can only operate a buy, refurbish, operate, rent out business model, because if you go out and wants to buy property, develop it, and then sell it on, you are an alternative investment fund rather than a real estate company. So it puts a lot of limits on your ability on how to go out and make strategy. And then, of course, since we are sort of operating in an area that is also seen as crypto, you don't only have the normal risks associated with investment in real property of whether there is oil contamination on the plot, or whether real estate prices go up and down. You also have the risk of being perceived as part of this crypto community, and the volatility in pricing of assets that deals with. So and that is true even if you are sort of an asset-backed coin, so to speak, or an asset-backed token, because that is basically what you are, an asset-backed token. I think we have 26 or 28 or how many risk issues that investors will need to look over, and understand before being invited to invest into the company. There are other regulatory issues about how you can market yourself and all of these things, which we've been dealing with. And to be honest, probably, if we had developed the property in the normal way of you guys buying it, going out, securing real estate mortgage financing, coming up with some equity yourself, the cost of developing the information material to put it on the market would have been much lower. But we invested quite heavily in creating a format that we could, amplify.
I have one question which you haven't replied yet, and it asks, is there any debt on this project, and what do bank thinks about this? No, there is no debt in this project. Banks, I don't know what banks thinks, but I'm sure it's not about us. I think in general they seeing blockchain and cryptocurrencies, and which is somehow related, but then again it's not. All this space as competitors. I like to combine them as a physical shops and online shops, and when online shops came by and physical shops are all screaming, oh, we're gonna just close the doors, or what's gonna happen with us. So this is exactly the thing I am seeing it, but they both are it. The banks are fine. I think they all will accept that sooner or later and issue their own, even the digital currencies. So I don't know what they think, but I think it's they both gonna accept that it's here, it's gonna be, and it's gonna stay here.
No, not in protection. I would say you are still since a token is considered a security. You are under the same rules. You can only do it in a specific company format and that company format, for instance, entails that you both have an executive management and a board of directors, so much more control in terms of how the company operates. Whether you promote securities, sort of real traditional securities, or tokenized shares, it's the same prospectus requirement exceptions that apply. The consumer ombudsman would, if you went out and say, okay, we have shares in this real estate company, come and subscribe for them in the normal manner, and through a token, it would be the same marketing practices rules that apply. I think the biggest difference, and we've highlighted that as a risk item in the information memorandum, is that if you do it by way of a token, you become part of the crypto environment, which fills on additional risks in terms of perception of being part of a, at the moment, more volatile valuation environment than normal traditional real estate is. So you would probably suffer more from, if the real estate prices in Vejle just went up, traditionally that would be the same for a company owning real estate in Vejle. But since you are a tokenized company put on the blockchain, you might risk to see valuation fluctuations that are not linked to the underlying value or the value of the underlying property, but to the fact that you are a token. And I think that's the biggest, so to speak, risk. But I can also see that when we started this a couple of years ago, it was I hadn't heard about this before, and now we're seeing it happen all over the world. We're getting requests in from Poland, the Baltics, the UK. I had a meeting the other day with a South African law firm that has created an exchange that is basically agnostic as to the type of asset, but it's basically putting digital assets on an exchange, whether it's this asset or that asset, and regardless of where the asset is basically situated geographically. So it's rapidly coming of age. I think with MiCA and the MiCA rules from the EU in relation to regulation of how digital assets are traded, you will see you'll see this coming even more under the regulators' the realm and domain, and that will provide further security for investors.
Yeah, I do agree with this, because of course the more regulation will come, but it also will provide more security to the real estate investors, and more only legit companies will provide digitalization of real estate or real world assets.
Maybe just a comment to echo some of the stuff that you guys have been talking about. So I think it's important that we, when we talk about institutions like banks in the context of financing real estate, that we should be careful not considering them as a competitor to this kind of investment, because there has been a lot of talk in the industry for the past couple of years about how cryptos or cryptographic-based tokens are a competition to the world's currencies. This has nothing to do with that. This is one of the best use case examples of blockchain technology being used for actual purpose of demonstrating value and ownership. So when we talk about convincing institutions, or maybe participating with institutions, or even your convincing your advisors and tax advisors or lawyers to make sure that everything that you do in terms of this investment is done according to the law, that this is introduced as a real estate investment case, not a blockchain or a crypto case. And I think that's one of the things that I saw first about Coreestate when I first was introduced to it, is that it has nothing to do with crypto. It has everything to do with fractional ownership of real estate, and I like that that side of the introduction to the investment. It shows that the idea here is not to convince people to jump on board into some moon space rocket. It's actually about introducing real estate investment to a red ocean type of investors that have never maybe had access to invest in real estate before. And I think this not only helps investors, more professional investors and angel investors or other types of investors that maybe have a couple of real estate assets, to continue doing so, but with fractional ownership instead, and by that de-risking or at least diversifying your risk across your portfolio.